What are FANG stocks? According to Investopedia, this term was created by Jim Cramer, CNBC's host in Mad Money show. FANG stocks consist of 4 growth stocks that are traded in Nasdaq. They are Facebook, Amazon, Netflix and Google or Alphabet. Facebook is social media giant with almost no competitor that come close. Right now, Facebook price is around $144. It has P ratio of 21 and earning per share of 6.6. If we bought this stock at the start of 2018, now, we are in red territory. As we can see from this graph, Facebook always growing their revenue and net income in the last 4 years. Their revenue grew 47% in 2017, while net income grew 55% in 2017 compared with 2016. Facebook also has no debt in its balance sheet, so this stock has good financial strength. Next stock is Amazon. The company that started from nowhere by selling books several years ago, right now is the second US company that has valuation of $1 trillion after Apple. Currently trading at $1,520 with market cap of $778 billion. Amazon has high P of 89 and earning per share at 17. This stock has business almost in every industry, from e-commerce, streaming service to grocery. This graph shows Amazon's revenue from 2015 and 2018. We know that this company is very aggressive in growing its revenue. Up 27% from $107 billion to $136 billion in 2016. This year's estimate Amazon will generate total revenue of $232 billion. Netflix, this company is a behemoth in streaming services. How do you not know about Netflix? This business not only in US but they expanding also around the world. Next year, Netflix is aiming to release 90 films per year and I believe this company will be close rival with Hollywood industry. Currently trading at $260 per share, with market cap $114 billion. Netflix has very high P ratio at 93, reflects that investors are hoping the stocks will getting bigger in the future. Take a look at Netflix's earning per share that grew significantly in 2017, up 235% from 2016. Netflix also growing at steady pace and yearly basis, around 30% increase every single year. The last stock is Google or Alphabet. This stock is trading at $1,025 per share with $709 billion market cap and P ratio of 38, same with the other 3. Google is highly demanded by investors that makes it so expensive. Alphabet has good revenue and net income increases for the past 4 years. Let's take a look at their stock price performance year to date. FB green, NFLX orange, Amazon blue, Google white. From this comparison we can see that from year to date, AMZN and NFLX have given us return of 30% and 36% while FB and Google have negative return, -20% and -2.6%. Actually, we have one new, that is Apple. So if we add Apple, we will come up with FANG stocks. Okay, hope this video can give you valuable information. Please like, share and subscribe.